Hey, good morning this time around. We are at a little different time here today. And honestly, this week's market update is going to be a little more brief because we have our live Q3, I guess it would be, planning webinar here this evening at 5 p.m. So if you're not registered and want to catch up on the recession updates, I'll actually put the link below in the comments. Definitely check that out. Get registered ahead of 5 p.m. Pacific time, and we'll look forward to seeing you this evening. That said, obviously still wanted to make sure to join you here for our weekly update. Again, a little more brief today, but we will cover some housing data, some retail sales, and of course, we've got the Fed minutes that came out just yesterday that we'll touch on as well. So on the housing side of things, we had housing starts down from expectations and quite a ways down from last month. Expectations were actually lower this month than last month. Basically, the market was expecting that we might see housing starts drop, and they certainly did, but by even more than expected. So down at 1.45 million, and coming up next, we've got some more housing data as well with new home sales, so we'll be sure to catch you up on that point as well. But then also on, I believe it was Tuesday, we had retail sales numbers come out, and retail sales were flat for the month versus up 0.8% last month. So 1 month data point, nothing to write home about quite yet, but a big data point, and something we'll definitely continue to watch. As for those who listen to us, you know that we feel that all these challenges with interest rates and inflation and all that are big, but they take some time to work through the economy. And really, we haven't seen it make much of an impact on the consumer yet. But obviously it's something we're watching very closely, and this being a data point that can point a finger towards something one way or the other. Again, 1 month, so nothing to worry about too much yet, but it's something we'll continue to keep an eye on for sure. All that, but maybe the biggest piece of news here this week was the Fed minutes on Wednesday. And the reason I'm covering it is not so much because there was so much in there, but rather to talk about this just crazy amount of speculation it seems that we're seeing lately around the Fed. Again, same thing for those who do listen to us. You know that we feel very strongly that the Fed has put themselves in the center of market attention like for 2.5 years probably now. I mean, it's like everything revolves around the Fed. And no different, obviously, at this point either. The minutes were released on Wednesday. They basically suggested continued rate hikes, but that the pace might slow a bit. I don't know if that's news to anybody. I think that's what the Fed has said time and time again. However, the markets really liked it. The markets kind of took off thinking that maybe this meant the Fed wasn't going to be as hawkish moving forward as they have been, and maybe slow down a bit. Obviously, couple that with some of the inflation data that we've seen and the talks about slowing inflation. And I think that's why we saw the markets kind of pick up quite a bit off that news. Now, what I wanted to spend more time on, though, is not necessarily the Fed minutes, but just this amount of speculation around the Fed and what they're going to do next. And the reason I think it's so important this go around, it's been prevalent again for like 2.5 years here, but the reason I wanted to address it today is because we're seeing all this speculation. I mean, the past 2-3 weeks, any market moving phenomenon has really been based around the Fed and what they might do. We had jobs data come out, we had inflation come out, we had Fed minutes come out, and the market reacted to all three of those pretty significantly. The reason I'm bringing this up is because we don't have a Fed meeting in August. And so although all this is important, remember, there is still a whole month of data before the Fed will actually make any decisions. So they've said time and time again, they're going to watch the data, they're going to keep an eye on things, and they will adjust as they need to. Yeah, sure, the jobs looked good. Yeah, sure, inflation looked like it was maybe slowing for a month, but there's still a whole nother month of these data points before they make their decision. So obviously the markets are reacting to it. But keep in mind that we've got some time here before that actually gets handled, and I think it's very likely that the one data point is not going to be the factor. It's going to be the combination of the two. So let's keep an eye on what's to come here. Coming up next week, we'll touch on new home sales. GDP revision comes out, and of course, jobless claims on Thursday. As far as the question of the week, as you know, again, we do not have one this week. But I will put the link to register for our event here this evening at 5 p.m. If you haven't joined already or registered already, make sure to do that. We're going to be talking a lot about the recession, what we see ahead, when one may or may not be coming, are we in one or not now, and what you can do to kind of position yourself for the different scenarios. Have a great upcoming weekend. Stay cool. I know it's another little heat spell here in the Pacific Northwest, and we will see you next Thursday at 3 if you don't join us this evening.